Hello, this is Ram Shivakumar and my podcast, Pivotal Conversations, where I speak to people in all walks of life about their motivations, mindsets, and circumstances that shape the choices they made in their lives. Today, I'm going to be speaking to Jeff Eschbach, engineer, entrepreneur, angel investor, and professor. He's going to tell us about the pivotal moments in his life and how and why he made the transitions that he did. Jeff, welcome to this podcast.
Hey, Ram, pleasure to be here. Thank you for inviting me.
Jeff, let me start with the entrepreneurial segment of your life. How and why, after having spent many years as an engineer at Motorola, did you make the switch to being an entrepreneur?
Great. I don't know if I would actually call it a hard switch. I view it more like a natural evolution. So way back in the day, before Motorola, my time at Purdue, did get an engineering degree, electrical engineering, loved the tech, loved the innovation, little stint at Intel in Japan, and then Motorola Research for a long time. And for me, there's just a natural thing of wanting to, I'll use innovate versus being entrepreneurial, but coming up with new stuff and getting excited when you can solve a problem, create something to do that. And I think that was always in my nature. I think what happened over my career, though, is being a technologist and enjoying that, I did start seeing the connection with the business side. Sometimes us technologists can fall into the trap of building technology for the sake of technology or because it's cool,
Yes.
those kind of things. But I started really getting more excited that, I'm building something to solve a real world problem. And for me, once that kind of business aspect fell into it, it was like the excitement of learning to play chess over checkers. There's nothing wrong with checkers for any checkers fans out there, but chess has just got a level of difficulty and strategy that to me is more exciting. So where I'm going with all that was, I feel like I always wanted to innovate and come up with new things. But once I really started seeing that human connection and how it could solve people's problems, at some point, I felt more comfortable shifting into what you might call true entrepreneurship. And also say that good tech is entrepreneurial, right? If you're at a company like a Motorola or Intel, you would hope that you're trying to do something to solve a problem that impacts people's lives. I just got to a point where I just felt the motivation, and I saw enough people around me. I've got enough support that I felt able to kind of go out on my own.
Okay. So you start this company, PageVault. Tell us a little bit about this company and tell us also about your early moves, things that worked and things that didn't.
Absolutely. So first of all, PageVault is a company that enables lawyers or litigators to capture content from the web in a way that is tamper-proof and holds up in court. So essentially doing print screens of web content for lawyers to use. An example, someone might say like, I hurt my back, I'm injured, I want a payout, I want a workman's comp payment. They're totally lying. And then they put their rock climbing and bungee jumping pictures on Facebook or Instagram. Lawyers use our software to do the print screens of it in a way that gets all of the content. And again, is without getting too technical, does it in a way that you can show the chain of custody was preserved. No one could have tampered with it. So that's the heart of what we've got. And early on, I think the biggest thing was I'm kind of going to my Kellogg days. I was at Motorola. Was fortunate to go start up an MBA program degree at Kellogg here in the Chicagoland area. And as much as I love the coursework and the things I was learning, some entrepreneurship classes, the biggest thing for me was surrounding myself with people who were also doing it. So some of my best professors back in the day were not only great at the book knowledge, but I could see them and say, they're relatable. There's nothing special there. Like I could do what they're doing. And to have a template so you can see like, others have actually accomplished it, to me was highly motivating. And then I felt like I had a great support network around Chicago. So building on all that while I'm in school, had the idea for PageVault. But really it was thinking like, I've got other people that are a good template again, that show that this can be done. Frankly, there's an expression that a rising tide, lifts all boats. And for a while there at Motorola, there was a great rising tide and it was going great. Motorola fell in some rockier times, we'll just say.
Yes.
And that did make it a bit easier for me to take the plunge and, kind of walk away. As that rising tide was going down,
Yes. Yes.
it was just kind of rough for all of us. So combination of great support at Kellogg, things were a little rocky at Motorola. I had already had a pretty good tech background and made the jump to do Page Vault. Yeah.
Undoubtedly, great company, Motorola. There's something that I think is often mysterious to many people, where ideas come from. And where did this idea of a page vault come from, and how did it evolve? Because it's rarely the case that what you start off with is the idea you end up pursuing. So what was it in your case?
Yeah, and I would also say that for Page Vault, we're a bit non-traditional. I think normally great ideas come from somebody experiencing a pain point. There's a term called product market fit. You always want to make sure that the product meets a need of the pain point. There's also a term called founder market fit. You want the founder to be a good match for the pain point. And I'm going to be a little bit vulnerable here and share that I probably didn't have the best founder market fit at first, because I saw the general problem of content on the web needing to be captured in some kind of way. Friends, maybe they're going through a divorce and a spouse posted something on Facebook, or even academia, people were posting things. But I didn't actually have a really good insight into the target market. So for me, I did have to get out there. And at first I thought, oh, maybe academics would pay for this kind of a service. Nope, they have no money. Like, oh, maybe journalists, the need's not there. Maybe law enforcement, not quite as strong, big of a market. So it took me a while of getting out of the building to find out that attorneys have the need and they're more than willing to make their own clients pay for something. So like, oh, that's a good combination for us. And that, honestly, it took a little while, where maybe if I had been an attorney, would have had more insight up front. But for the journey, I think the biggest thing, and we preach this all the time in startup world, is the market speaks. You've got to get out of the building. You've got to talk to your market. You have to find out. So luckily, I had learned enough that you don't just start with your initial hypothesis, again, for me, selling to academics, and you really need to get out there and find out what works and doesn't work. Have your hypotheses, be willing to fail quickly, and iterate. So with all that, we did iterate, and we did find that there is a need for lawyers. Again, wasn't as familiar with that market, but boy, I ramped up awfully quickly in the legal space once we found it.
Okay. Jeff, let me turn to something where a question or a problem where many entrepreneurs struggle. They probably are very good at coming up with ideas of things, but they struggle with things like money, especially engineers. Running a company is very hard. Raising money is very hard. Managing money is very hard. Another dimension is people, hiring people, firing people, managing people, mentoring people. Tell us a little bit about your story here.
Yeah, I know. I'm going to turn that last part of it, though, a little bit upside down. You talked about managing and mentoring. For me, the biggest key was being on the receiving end of that and building a network where I was getting mentored, or I had great people above me who were managing me in my career. I think people are fundamental. If I was going to say there's one major thing that I've learned, is surrounding yourself with great people is instrumental in having success. Now, you talked earlier on about the ideas. I very much agree that people have great ideas and maybe they don't know how to manage money. I think initially you've got to make sure you explore your market. And I'll keep using this term, get out of the building. Because if you've validated your market, you've talked to 100 people, maybe you can get a little bit of a minimal viable product out there to prove interest, your ability to fundraise is going to be much stronger versus just an idea on a napkin. But even there, if I wanted to know how to do fundraising, I wanted to know how to manage people, my best advice is how I learned, which was I got great people around me that I saw were successful, and I asked them to help me out. So my startup would have been toast if, I'll give some credit here to the Chicagoland ecosystem, but I had some great people that put some time in, and I try to pay it back now by giving talks and mentoring. But if you're early on, you're not familiar with fundraising and you're not familiar with running a company, be humble and go and find people who do know and open yourself up to finding great mentors.
Jeff, tell us a little bit about difficult moments. because entrepreneurship is often romanticized.
That is
And
so true.
and we read in magazines stories of great success, but we don't often learn about stress. Tell us a little bit about your difficult moments.
Absolutely. And I'll even say, just sort of a little bit of background here. Page Vault, we had a successful exit, but it was a tough road. And it took me 10 years to go from initial concept and trying to do the first couple of interactions with potential customers to actually selling the company and having a nice return for our investors. So it was a journey, and it was a tough journey along the way. The first point probably was the decision to go do it. And, I don't want to diminish, we'll call it entrepreneurship. People love the idea of doing entrepreneurship inside the corporate machine. And there's some great things you can do. I try to say entrepreneurship with innovation. You can do a lot of innovation in your roles in large companies, and it can be exciting. But to take the plunge and truly go and say, I'm going to start a company, I'm going to sit in the captain's chair, I'm going to be the CEO,
Yes.
as hard. And I
Yes.
think that was probably I had a lot of security with Motorola at the time, and a safety net. So that was one of the riskiest, scariest moments to go do it. For me personally, on that part, it was trying to think of the opposite. I was like, all right, if I don't do this, life is short. Do I want to wake up someday and I'm, in my 80s, whatnot, and be like,
Yep.
why didn't I do it? I am fortunate that I live in a place where I figured if it doesn't work out, all right, maybe I have to eat some peanut butter and jelly sandwiches and ramen noodles. It's not so easy, but I figured I wasn't going to literally die. So it
Yeah.
gave me the motivation to, like, again, why not go and take a crack at it? So that was probably one of the earlier scary things. Along the way, and this gets to why it's so important to have great people. I had some tough decisions, we'll say, with hiring. And frankly, with firing. We had a strategy of trying to do that big VC growth. And this is going back 6, 7 years. Today, it's much more popular to be break even and profitable. But back then, everyone's like, oh, you just got to go and just raise that next round of funding, raise the next round of funding. And we really got into a bad spot where we were burning a lot of cash. I could do the math. And unless I was going to go raise another big round of funding, it was going to be tough. And I'll just drop a couple names here in the Chicago ecosystem. Gail Wilkinson, Troy Hennekoff, they both had a talk with me about, again, this is why you need mentors. Like,
Yeah.
oh, you have a lot of mouths to feed. We are burning a lot of cash. And at the very same time, another founder, Ash Gupta, great friend of mine, has a company called Occasion. And he was talking about, we've got some friends that were going, we said, go big or go home. And
Yes.
he's like, we saw them go home. It's like, you realize that, maybe, you better be comfortable with the idea you might go home if you go big or go home. So all that kind of came together. This is when we were burning some cash going back 5 or 6 years. And luckily I had them kind of push me to say, are you comfortable with this? Are you really on board with wanting to do this? And I had to have like a bit of an existential, moment with my co-founders. And we decided, like, no, for us, it was more important. We built something at that point, got, north of $1 million of revenue. It was still small, but it was growing. But we didn't want to lose this. And we made a very tough decision to push for break even. And I had to fire half of the staff. And you think about going from 13 or 14 down to 7. That was personally, professionally, that was a bad day. But to know that I got the clarity that we wanted to go and maintain the company and not risk it all, because we're on track to do that. Having supported my co-founders, going back to this theme of people, having people there to back you up, my mentors, my board members, also backing me up. It just made it at least manageable and gave me the confidence to do it. I think all that for that really rough time at Page Vault, I look back on it, and it was so important to have people that I could talk this through with, and felt comfortable enough with me to actually give me a little shake, say, Jeff, what are you doing? Like, are you sure? Don't be on autopilot. Do you really want to make this tough choice? And got me back on track. And we pulled it off. I'll admit that, for those who can watch this and aren't listening, if this is 0, our revenue came down and just barely, we got it to where we almost ran out of money, but we pulled it off. And I'm very grateful that we were good stewards of the money, because I had so many people around me helping. I'm going to throw out one other here. I know long-winded answer here to your question, but there are so many challenges,
Yeah.
speaking of here. When you do have, I pride myself. I had a wonderful team. When you occasionally get a person that's not a fit,
Yes.
having the courage to let them go. When we had to do let go half the team, it hurts and is not fun. But if you're in the CEO role, your job, you have a fiduciary responsibility to the whole company and have and make those tough calls. And at the very end, we may talk about it later, but to even sell the company, have the exit, that was not, an easy decision. But again, always having that lens of what's best for the company, even if it's hard. That's what I signed up for.
Jeff, thanks for emphasizing the importance of mentors, coaches, and guides. I'm not sure enough people have that in their lives. People who are sort of asking them the hard and honest questions. Sometimes these questions are personal about your own role as a CEO, as a leader, and so on. So thanks for emphasizing that. It's good that you had that. And I'm sure you are that for many of your friends and many of the companies that you've invested in. Very quickly, tell us how this exit happened. All of a sudden, slowly, and tell us about it, whatever you want to share with us.
You bet. So going back to 2021, we're getting near 10 years of running Page Vault. I'm going to build on the mentor thing again. I was talking to some of my own mentors. I think Carter Cast, Pritzker Group had invested in us. I mentioned Gail from Irish Angels. I was saying, like, man, at some point we do want to do an exit. And they were tuned enough to the market to basically just say, Jeff, if you're thinking about doing it now, and things are frothy in 2021. And as much as I kind of heard it, like the fact that that's what they were, I was an entrepreneur at that point, focused more than investing. Their world is investing, so they knew it. So having the people around me to consistently say, if we're going to do it now, and we don't mean next year, we mean now, that was instrumental. And again, I had some other great investors who were also mentors, and I started floating the idea by them, and they all gave the thumbs up. They're like, we love you. We see this thing is continuing to grow, but it's been 10 years. So if you feel good, yep, we're backing you up. So once I kind of got that kind of pushed in front of me, then it was clear. And I didn't know how to go. I basically got an M&A banker. We went out there, started checking the market. And thank goodness that we did have some great mentors, because we barely pulled it off. Like, we got it done summer of 2022, and things were softening then. And I'm just going to say that the group that acquired us, I love them. They've been fantastic. And they had a very different thesis. Where we were at break even, they had the ability to put more money in, pour gasoline on the fire, and try to grow and go big. So it was a wonderful win-win. Those of us that had grown the company to that point were at that point less risk averse. I did not want to double down. So we got the cash out. The new guys coming in knew what they wanted to do to really push the accelerator, and they've done exactly that. So it actually worked out very nicely. But again, I'm going to go back to surrounding myself with people that knew how to nudge me and say, let's get off of cruise control and let's do this, was instrumental.
Jeff, by way of educational lessons, in preparing for exit, what kind of time frame do you have in mind? What would you tell people to do?
Whatever you think it's going to be, it's going to take longer. That's the fundamental thing. I remember starting this and thinking, in 3 years, we'll get an exit. I know it's just real life. Real life is hard. You get punched in the nose. You're not expecting it. I think a lot of conventional wisdom now is, for a good company that does well, you may expect over 7 years before you see an exit. It can't be longer than that. If anything, I see some of these occasional ones that go very, very quickly, and it's extremely surprising me now to see that happen, unless they die. But to see a successful one, usually if you're doing well, you keep that thing going for a number of years.
So Jeff, then you made this transition from an entrepreneur who's had an exit to becoming an angel investor. In fact, not just being an angel investor, but running an angel invested group. How did that happen?
And I was fortunate that I was able to. So I did mention that. Oh, it's not if you heard me. So I was fortunate to be able to start that up while I was an entrepreneur.
Yeah.
I did get to that point where we stabilized Page Vault. We got it to be profitable. Frankly, that took some pressure off of me and allowed me to have a little more time to go start Chicago Early. So ChicagoEarly.com is our group. back then they didn't have a lot of these crowdfunding mechanisms to invest in a company and get equity. So I wanted to go and form a group, frankly, so I could put a little bit of money in because that's what I wanted to do. And found that there's a large group of people that are accredited investors who wanted to write smaller checks, but still be involved and help out. So it came from my own desire. I thought I might get 10 or 15 people to join in. We've got over 200 people on the mailing list now.
Yes.
It's been a great success. But if again, back to your question, for me, it was wanting to learn. I've got a thirst to really know entrepreneurship, and it
Yes.
seemed like the natural evolution. And if you can do it in a way where you're writing smaller checks instead of bigger checks, that was a great way to learn, kind of get our feet under us the first few years.
So, Jeff, you've been doing this now for more than 5 years.
Yeah.
Tell us a little bit about the landscape of investing for an angel investor from your lens. And what do you see and how is it changing?
Absolutely. So once you did get in like 2020, 2021, the markets were frothy. The valuations were quite high.
Yes.
We have seen a pullback since then in 22, 23. I think it's recovered somewhat. I don't know if I could quite say it got back to normal. Maybe it depends on what you view as normal. But I think on one side, we feel like the valuations are much more in line with what they should be if you go back over 5 years ago. Yet there's still a decent amount of capital now. So when we see good startup ideas, they're getting funded at the earlier stages. I can speak especially for the Chicago market, but across the US especially. But I'm pretty confident at this point there's enough liquidity that people with good ideas, there was a time when you could have a silly idea and get investors. That actually has been coming along pretty well. And I think it's been healthy in that the ideas that I see now do seem more vetted. They have gone out to market. It's not just an idea in their head. They made sure that they've talked to target customers and have a little more heft behind the idea. So again, it's been a little bit of a roller coaster, but right now, early stage, again, these seed, pre-seed, even up to A, we're seeing people able to pull those off and getting investors.
I want to now talk a little bit about the entrepreneurs themselves. You were an entrepreneur many years ago, or you started as one some many years ago. You're not seeing many more today from the other side. Tell us a little bit about how you see them. How do you actually assess an entrepreneur today?
So first of all, I do want to say that here in the US, I'm really encouraged to see the diversity of entrepreneurs that we're getting here. And I think you mentioned around offline, you've got a large audience in India. And, we see like so many people that come from tech, Indians from across the globe, people that might be immigrants, could be first generation, second generation, all demographics. So I've definitely been seeing more of that. And I think that, frankly, Zoom has helped with that. There used to be a point where if you wanted to pitch an idea, if you lived in a certain place, if you didn't have or investors around you, you're kind of stuck. Now people are much more open to taking those calls from around the globe. So I'm encouraged by that. I'm seeing that. I do think that the entrepreneurs are more savvy now in a good way because there are resources like this. I can listen to Rob's podcast, hear from people that are experienced. So I get the sense that people are doing their homework. They are aware of what is expected of them as far as having done research. What goes in a pitch deck, I think, is much more consistent now. So I'm liking it. Again, I'm basically seeing higher quality people from around the globe.
Are there any companies or industries or sectors that you want to briefly discuss?
Let me think here. I'm much more comfortable with B2B SaaS just because that's my thing. So I'm there. But we've invested in hardwares, invested in a shoe company once, the whole thing. I don't think that there's like a sector for me personally that I get especially excited about. I'll admit that biotech is harder just because the check sizes are much larger. But I've got some great folks here. Rafik in the Chicago ecosystem does hardware tech, clean tech. We see all sorts of things here. I think they're all getting pretty good traction. So I'm not going to limit myself and get pigeonholed into one there, Ram.
Yes, and I've seen, because I'm part of your group, a lot of fantastic companies out there. Very impressed by this. Tell me a little bit about how you actually source your deals.
Oh, so this, well, I don't want to sound like a broken record here, but this deal does go back to that people thing. maybe maybe a little different spin. We talked about mentoring, a bit earlier. And sometimes I get questions like, how do you find mentors? How do you find good people in your ecosystem? And to me, part of it's just getting out there when you know there are events and talking. But when you help others, I don't necessarily believe in karma, but it is amazing to me that when you help other people, good things come back to you and
Yeah.
people notice that. So my philosophy is if you get out there and you are talking to folks in the ecosystem, again, volunteer. Oh, I've got experience now with pitch decks. I'll help look at pitch decks. Oh, you might want me to go and do a podcast. You help me to go and judge a competition. Who knows what? And the more you get out there, I think people see you're willing to help, then they help you. And part of helping an investor is deal flow. So I'll drop another name here. Chris Deutsch with a group
Yes.
called Lofty Ventures. Desiree Vargas, Josephine Collective, Jonathan Ellis with Sanofarm. There's all these people I know that I think I've done a little bit to help them. And they're like, oh, Jeff seems like a good guy. Oh,
Yeah.
we'll send you this great deal. And then I'm like, oh, they seem like great people. I'll send them a deal. So, again, maybe a bit convoluted, but the fundamental thing is you get out there and you're helpful. People want to help you. And at this point, I think because we've been sharing the deals we've gotten with others, now we've got all these folks around the United States that send me good things. Our members, we've got over 200 members. I think they like the group and we've had a friendly atmosphere. So now someone like you, Ron, will say, hey, Jeff, I've got a cool deal. Check
Yes.
this out. So at this moment, I probably have more deals coming in than I want, but it all comes from if you're good, you're building relationships, you're helpful in the ecosystem, people want to help you back.
Just a quick follow-up to something you mentioned here. You're getting a lot of deals. How do you vet them? As in decide that this is something you want to put to the group? Are there some minimum criteria?
So, yes. First of all, I think, there's this construct of the jockey or the horse. And
Yes.
there are people who say the jockey, meaning the entrepreneur. Do we trust them? Are they going to be, able to iterate? The other one is the horse, meaning the market or the idea itself. My co-founder, Brian Crump, and I, when we look at these deals, first cut, we do actually look at both. And I know some people that are like all jockey or all market. To me, both have to have a minimum threshold. If we, frankly, if you dislike the person, like, I do not need to be working with somebody for 7+ years and getting a phone call from someone that just, makes me bristle. But if the idea is bad too, so we got to at least have some credibility there. Once we get to that first threshold, the sniff test, we have some members that are kind to help us out with a bit of a review committee. We've got folks from local MBA programs, Kellogg and Booth here, and some members that have done entrepreneurship. And we take a first cut and we weed through it. The last thing though is my members themselves are fantastic. I don't just send out an email that says, here's the deal we're doing. Every month when I send something out, I'll include 6, 8, 10 pipeline deals with an overview, hopefully a video recording with the entrepreneur. And we ask our members, what looks good, what doesn't? And we get fantastic feedback. And this is crowdsourcing of the information, everything from inside information. So I've seen this before, it doesn't work, or we know this, it's great. And when I get that, it really helps me pick what next deal or two to do. When you know your members are already excited about something, it just makes it that much easier in the next month to put it out there.
Jeff, I want to now pivot to the third leg of your career, let me say, being a professor. You did graduate from Kellogg. You have been very closely involved with Kellogg. Tell us a little bit about this course that you teach at Kellogg about entrepreneurial discovery.
Yep, new venture discovery. It really is about taking a pain point. I want to be very intentional about starting with the problem. We don't want to start with a solution. A solution looking for a problem is a bad place to be. You want to start out with a problem and try to really dig into that. And then hopefully if you really kind of uncover something interesting, then we can propose solutions and dig into that. But it's the methodology, a very learnable methodology about getting out of the building, having our hypotheses. There's a framework called the business model canvas. So we work with that to look at different aspects of a business. And again, your first hypothesis may be wrong. Usually it is. But can we go out and have techniques to talk to our target market and figure out, oh, maybe this isn't the real problem. Maybe that's the real problem. Oh, if I have this proposed solution, it's falling short on this level, but maybe if we do this kind of tweak or that kind of tweak. I'll just put out this resource. There's a person, his name is Steve Blank, like a blank sheet of paper. if you want to go, some consider him like the godfather of lean startup methodology.
Yeah.
He's got a great course out there on the platform Udacity. If you look up Steve Blank's course in Udacity, really good stuff about the basics of how you get out of the building. And frankly, this is what I find most entrepreneurs where they fail. And it is because we think we're smart. We don't want to get out of the building. We think we've got it figured out. Or oftentimes they're afraid. Like, oh, I don't want someone to steal my idea.
Yeah.
And 99.9% of the time, you're so much better off getting the feedback versus trying to keep it to yourself, because oftentimes we're wrong. So all that distilled down is that class is about getting out of the building, trust the market, let the market educate you to go do your startup.
I love that phrase, get out of the building, because it stops us from trying to build that perfect idea inside the classroom, the one that doesn't work. Are there any notable stories of success from your classes over the years? Any things you want to mention? Because I'm sure people learn things on this journey that may not necessarily show up in that venture, but may show up in their next venture. Anything that you want to share here about what students take away from this experience with you?
Yeah, you know what? So I'm going to mention a person named Jag Gatu, one of my students, based in India at the time, has a very successful startup called Uptime AI. But I love the process he went through. He went through the course, did not worry about his idea. He had this idea for a machine learning approach to like oil rigs and platforms like that for their machinery. But in the course, he was willing to do another idea that just to learn the mechanics of how do we do startup the right way. Went through the course going back a number of years, got done with it and said, Jeff, I want to do this other idea. And basically, can you help out a little bit? And this gets back to mentoring. So you bet you've learned the class, but now you're a student, know you, helped him out some on the mentoring side. And this guy took all the lessons to heart, very intentional about getting out of the building, talking to his customers. And now he's built a very successful company where I think they're past Series A. But I just love the fact that, again, it kind of exemplifies that you don't have to have some kind of secret sauce. You don't have to be, Steve Jobs with an innate ability. If you follow the discipline, you follow the steps, you can do this the right way. And he did exactly that. So he's one of my shining stars I always point to because he followed the framework and has done well.
Great story, Jeff. I want to now close with two short questions. My first question is this. Tell us a little bit about the people, the most important person or persons, if you want to mention a few, that have shaped and influenced your life.
Oh gosh. So I'll keep this one to my professional life. In my personal life, you got the family and parents and all sorts of great influence. Professionally, though, I'm going to go, I may have already dropped his name. I've got some folks, though, that when I first started doing entrepreneurship were extremely kind. I mentioned Carter Cassidy, Pritzker Group, some other folks like that did not have to take so much time, but they did. And I try to pay it back now. But I think when you can find those people that are willing to invest time in you, that is so precious, and don't take that for granted.
Yes.
I know I've got like 10 names going through my head right now in the Chicagoland ecosystem. They're absolutely instrumental. I go back to my Purdue days, those professors that were willing to have office hours and sit down with me and kind of show me the way. At Motorola, I had some great mentors as well. Where I'm going is like all of the times when you find someone that's willing to take you under their wing. Again, I had to be put myself out there. I had to indicate that I wanted the mentoring. But when you got that, that is so precious. So maybe I'm turning this almost into a bit of advice, is when you find that, don't take it for granted, latch onto it. And whether that's then, scheduling a quarterly meeting or twice a year meeting, making sure you don't forget to send them a little gift to say thank you over the holidays, all those kind of things to nurture those relationships. They've been fantastic. So I think I've got a handful of people, but the fact that maybe I was also willing to listen and I can come back and show them that I'm coachable. When they tell me something, I'd come back a month later and say, oh, I listened to what you said. Take a look at my, my revisions. That has been so helpful for me. So building those relationships, when you know someone's willing to help you, that's been crucial.
And so now the last question. What is your advice to young people? You teach many of them. What would your advice be? Because many of them are looking for advice.
Yes. So I'm going to give a couple points here, building off what I just said. Go find mentors, be out there. If you help, I think if you're willing to be the kind of person that's very helpful, it's amazing to me how that all does come back. So don't just be a taker from the ecosystem, be a giver. And I think you're going to get a good reputation. Those things are going to come back to you. Be willing to get out of the building. That's important. But maybe something that, go back to earlier on, which is life is short. And, it's easy for me to say now that, I think I'm in the back half versus the first half here. I've got some gray hair, but while you want to be prudent, like I just never would want to woken up one day and say, I really wish I would have done this. And especially for entrepreneurship, and you may not want to have 20 failed startups that started looking bad, but to go do that one, I think people usually view that positively. And if you can muster up the courage to try it, I find that most people that do are glad they did, even if the startup fails, to know that you went out there. There's a famous American president, Theodore Roosevelt, and he talks about you've got to be in the arena and how much more important, like even to lose in the arena, to have played the game versus just been on the sideline as an observer. So that's my motivation, is get in the arena. Make sure whatever the arena is for you, have the courage to find out, just so you don't have that regret. And again, if things don't go right, now that's life. We'll find ways to go and build upon that. But hopefully it gets the right support around you to go for it. I think that's probably the best thing that I've done in my life.
Jeff, thank you. Great messages. Things that stand out in my mind. I love that phrase, get out of the classroom, get out of the building.
Yep. And I can't take credit for it. I think Steve Blank is the one that championed that, but I'm willing to take it from him.
Put yourself out there. That's the thing that you said. And easier said than done, because people struggle with that. But the truth is that what I hear listening to you is that you have discovered through trial and error a lot of the things that it takes to succeed. And the truth is, everybody who's successful has discovered that. It doesn't just happen sitting in a room. So thank you, Jeff, for spending 30, 40 minutes with me, sharing with my audience and me your life story and your wisdom, your thoughts on how best to navigate life. Thank you so much, Jeff.
It was a pleasure, Rob.